Good afternoon, everybody. Uneducated Economist here. So I got a few articles I want to share with you guys. One of them talking about the gluts, the future gluts of inventory that is going to be taking place after the supply chain shortages have dissipated. And now this is something that I have talked about months ago, saying at some point that this was all going to go away and we're going to find that there is going to be more inventory out there than everybody knows what to do with, and that you're going to start seeing things go on sale, prices come down, get 2-for-1 deals. All that stuff is going to be taking place here at some point in the future. Now, I don't know how long that's going to take and where you're going to find those events taking place, but just look at the lumber industry. Look at what took place in lumber, and that is probably going to be a very telling sign of what's going to be taking place throughout the rest of the economy at some point as it reaches out there, because lumber happened very fast. There was a shortage, there was a manufacturing depletion, there was a big increase into the manufacturing, there was a huge increase to the amount of inventory out there, the supply chain got reestablished, and the prices came down. That is going to be the same story throughout the rest of the economy. I know it will. Now you can see the changing of tides taking place right now. I mean, just look at the central banks around the world. They're all announcing how they are going to back off on that easy money policies, right? They are going to back away from the quantitative easing. As far as tapering goes, where they actually taper back their balance sheet, where they are either selling or like removing or shrinking the balance sheet, that's like all different from what they are doing. They are just not purchasing as much as they once were. They are still in that easy money policy. It's just not as easy as it once was. And so that's the tapering. A lot of people think that they are reversing course on their quantitative easing. They're still quantitative easing. I mean, they're still buying those treasuries. They're still buying the mortgage-backed securities. They're just going to be buying less of those. That should have an effect on the markets, where the markets are saying, okay, so the Federal Reserve is no longer a buyer of these things. With less investment going into these treasuries and into these mortgage-backed securities, the idea of the Federal Reserve not being there should cause the prices of these things to fall and the interest rates to rise. This is something to think about, guys, because nobody knows, or I shouldn't say nobody knows, unless you were some sort of investor prior to the early 80s, then there's really nobody out there who understands a continual rising interest rate environment. Like, they have no clue of what that would be like, because since the early 80s, when U.S. Treasuries hit like, what was the 10-year was somewhere around 15% yield, they have done nothing but drop ever since then. I mean, there was occasionally where they would go back up for a little ways, as far as the yield would go, and the prices would fall as the yields would rise. But if you were a long-term investor, you have pretty much been in an environment where the prices would continually drop. The yields would continually drop and the prices would rise. That is going to be very difficult on a lot of people as they try to understand what it is to invest or be involved in a continual rising interest rate environment. It's going to start producing savers again if that was to take place. That's something that we really don't have in this country, is people who have this mindset that they want to save their capital for future investments. Everybody, immediately as soon as they get capital, are investing it, whether it goes in the stock market or speculating into Bitcoin or something like that. Most people do not save cash. Like, the mentality of saving cash is absolutely out the window. Nobody does it. Cash is trash. Inflation is going to eat up your purchasing power. But in a continual rising interest rate environment, you're going to start seeing those dollars growing stronger. And I don't care what people say out there about how the global demand for dollars is dissipating or going to go away, or someday that the dollar is just not going to be used as a world reserve currency. That's fine. You can go ahead and believe that. That ain't happening tomorrow. It may happen someday so far out in the future there, but it's not happening tomorrow, and it's not happening the day after that. And just go and look at China. Go and look at the articles that I put down in the description. And you're going to see where China is hoarding up. They're building up their foreign capital. They're selling bonds in US dollars. They're trying to get a hold of US dollars. Think about this, guys. This isn't like the world thinking that dollars are trash. This is the world trying to get a hold of dollars. Now, if interest rates begin to rise and the assets begin to fall, like we're talking houses and stocks and all that other stuff, these things begin to come down in price, it's going to be very difficult to get a loan because you're paying a higher interest rate for it. What are you going to need to buy those things? Cash is king. Cash is always king. Cash has always been king and always will be king. And the day that it isn't, you will know way ahead of time. Because the dollar will be able to buy more than what you had ever imagined before it collapses. That's a very difficult thing to wrap your head around. It took me a long time to try and understand how it is that the dollar is going to bubble and pop before it's finally deemed worthless and no longer used. It will be so desired. It will buy more than you could ever have possibly imagined. I truly believe that. And it's difficult to wrap your head around why that situation would take place. But think about what's going on in China right now. Think about the debt defaults that are taking place. Think about all the demand for dollars that are needed in order to make those debts whole. There's just not enough of them out there. When there is a debt crisis, they are going to want dollars. There is no other currency that anybody's going to want. Sure, the gold, that's going to be desired. People are going to want it. Same thing with Bitcoin. But when it comes to currency and making that trade right now, there is no other currency other than cash. Cash is the only thing that'll work. The US dollar. Doesn't matter what country you're in. Doesn't matter what it is you're trying to buy. In the end, every illegal transaction, they want to end it with US dollars. Every one of them. I don't care if you're dealing drugs or prostitution or fraud or anything else. In the end, it's not gold, it's not silver, it's not Bitcoin they want, it's US dollars every time. So go down and look at go down in the description and look at some of those articles that I posted down there. There's going to be one down there talking about all the gluts that are going to be taking place soon, which is going to create a huge problem with a lot of inventory out there. And I tell you what, it's going to be even more difficult to sell that stuff when you don't have cheap interest rates to buy it with. Think about that for a minute. Are they going to relinquish all this excess material to people with low interest rates? Or are they going to hit people with higher interest rates and charge them for all this cheap stuff that they're going to be buying? Wow, it's really raining out here. So, anyway, I'm going to leave it at that for you guys. So look at the article talking about the China's dollar thing going on, as far as the increase in foreign capital that they're holding on to. Take a look at that article talking about the gluts, the shortages turning into gluts. That's a really good one. And I forget, I think there was a third one that I'm going to put down there too, but I'll have to go find it. I can't remember what that one was about. But, okay. Uneducated Economist, thank you for hanging out with lunch with me. I didn't eat my lunch because you guys kind of make fun of me when I eat my lunch. But all right, anyway, Uneducated Economist, you guys let me know.